You're in the Business Insurance Zone with me, Steve Savant, national insurance columnist and financial color commentator. This week on The Biz, the Social Security series, the American Retirement System. And on today's show, protect your benefits from the downside with CPA and national financial columnist, Ken Davis.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everyone to the Business Insurance Zone. I am Steve Savant, your host, and we're broadcasting live to a nationwide audience of financial advisors right here in Fountain Hills, Arizona, home of America's largest fountain. And with me today, day 4, Mr. CLUCHFC, CFP, and CPA, Ken Davis.
Stephen.
And part of my study group. I am as brilliant as I am because I've been palling with this guy for almost 25 years. Unbelievable. And I give you the kudos you deserve.
It goes both ways. You were my mentor on the insurance side.
Well, when I was writing the script for this, I noticed that you said, protect us from the downside. And I actually accidentally wrote, protect us from the dark side. Now, when you said, when we're talking about some of this, there are some, we talk about the wonderful strategies. We've been doing this for the last 3 years.
Right.
I mean, people are sitting there with their calculators trying to get an appointment with you now because of all this now. And that's great. But is there any downside to some of the stuff we're talking about? I mean, I just want to make full disclosure here. Are there any issues that we need to cover?
Well, I think it's really important that when we do look at options, we look at the pluses and the minuses, and hopefully the pluses are much larger than the minuses. And as many would suspect, part of this is electing spousal benefits and stuff early on, but part of it is delaying benefits so that they will grow. And in today's economy, by the way, from full retirement age to 70, to have an 8% increase for 4 years, you can't do that in investments. But the downside is, what if you should pass away before you collect a dime or haven't collected enough to make up for some of the delays? Well, there are planning strategies. An insurance agent could put some term insurance in place for 5 or 10 years or more, so that if you did have an early expiration, then you would have the money to make up for what was lost. And that would help the surviving spouse potentially, and or a legacy to the kid. So it may or may not be all that terribly important to you. It may, but it may, and that is a downside. But there are some ways to do that.
Well, I just want to stop you there for a second. Think about this. I'm just thinking of Steve's age. Let's say I wait till I'm 70. And the last time I looked at my thing, it's like 40K. I mean, it's up there, right? And let's say my normal mortality, I'll get to 90. Okay, let's just say 20 years.
Right.
So I'm sitting at 40K, so I'm at 800,000 of benefits that I would be giving up, or my wife would be if something happens to me. If I use, in yesterday's show, if I used my spousal benefits to just pay my term premium from now till I turn 70, that might be the way to go to protect that asset.
Right, we're taking some of the extra benefits, I'll call them, to pay for the stopgap measure to take care of that. Plus, and then it might be a legacy thing, and leaving money to the kids. Some people feel strongly about leaving money. And the other thing that can be done while you're considering that is you could do, instead of a term policy, as a cash value permanent policy. That could be used to build a tax benefited savings account to draw on, or to provide the benefits to the surviving spouse, or a legacy to the children. So those are some of the downsides to this kind of thing. So nothing's perfect. And we're not going to know.
So there's no survivorship. There are no survivor benefits. If I die, what does my wife get out of all the Social Security I put up?
Well, she'll be able to get the survivor benefits, but
half of the benefits or all of the benefits?
No, like we talked about in the segment yesterday, she's going to get 100%.
She has to file for that, though, right?
Well, if she was using spousal benefits, she gets it automatically switched to the survivor benefit.
Gotcha.
If she's been using her own benefits, she will have to go out, or he will have to go out and file for the survivor benefits. And the fact is, you can actually switch, depending upon what you do, from survivor to normal benefits to spousal benefits. I mean, if you do it right, you can be all over the board.
Now, isn't that true, though, only if after 66 or whatever the full retirement age is?
The primary benefit and the spousal benefit are stuck if you do it before full retirement age. After that, you have plenty of room. The survivor benefit is a whole new clean slate. Okay, you might have elected early, your spouse dies, now you have a new survivor benefit, a new age, and you're locking it at the higher age, not the younger age you started with. This stuff gets so convoluted, and I don't want to get too much detail.
Sure.
The bottom line is we're trying to show people how to increase their Social Security retirement benefits and to make reasonable choices based on life expectancies, and we want them to know that there are repercussions if they make some bad choices. What I like about this whole thing is, if normally if I'm delaying, I get nothing. But if I delay and my spouse can get spousal benefits on my benefit, at 50%, well, I'm delaying, but only 50%, okay? So it's much quicker to make it back. And here's the other thing, Steve, you and I both know that the cost of life insurance has dropped dramatically. Why? Because people are living longer.
Right.
And so if I'm going to bet that I'm going to live longer, even if I may have some diabetes or other types of things, because medical science keeps coming up with new ideas and new ways to increase our longevity. So if I'm going to bet on myself. I'm going to bet that I'm going to live longer. Some people may feel differently, and they have to take that into account.
Well, when I'm trying to do I love it because we've been talking about calculations all this week. That there are calculations that are going to figure all this out from a math point of view. There it is. Then I'm going to have to say, now, are there ways to mitigate any risk? Because we are talking about the downside here. Things could happen. And I've seen where people don't understand all their options. Husband dies, they say game over.
Right.
They don't even know what to elect. They don't know what to do. And I think this is a whole new area. We used to get into elder care for long-term care insurance. I mean, I remember back in the day, about 10 years ago, that was big. I'm wondering now about elder care as it relates to Social Security and making sure you're getting your maximum numbers here and that you know all your options. And I think that's the thing you're bringing to the table today. There are so many options. Ken, I mean, I'm telling you, if there are 91 possibilities, I want to look at all of those things, and you just can't have a calculator. That's not enough. You need somebody that's skilled in it. Ken's a gun in this, and there are other advisors, but I'm telling you, I bet you after this week's show, we'll get a ton of advisors calling in saying, Steve, I got to tell you, I need to bring myself up to speed on the Social Security rules, the engagement rules, the strategies, and the downside to all this. Boy, I'm telling you a lot to talk about.
Yep.
When we come back, we're going to address the use of insurance, both term and permanent, to protect your benefits. And don't forget to enroll in IULUniversity.com for the best training, education, and sales support when it comes to life insurance for retirement income.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Welcome to the Brokers Alliance Workshop. I'm Jessica Lopez, and that's Steve Savant. What are you doing?
I'm collecting all our table shaving manuals for substandard cases for the impaired risk season.
Steve means companies who take off 3 to 4 tables using lifestyle credits.
But most companies just take a little bit off the top with a planer. But in our workshop, we cut the legs out from under the table to deliver the best offer.
If your case has been rated, we'll show you how table shaving with the right company can deliver the best offer.
Now that's a table shave. Well, welcome back to the Business Insurance Zone. I'm Steve Savant with Ken Davis. And remember, you can order today's giveaways at thebiz at brokersalliance.com, our 1040 overlay, and of course, our provisional income test to find out if your Social Security is going to get taxed. All about that tomorrow, as well as our Social Security manual. It just happens to have the Medicare and the Medicaid docs on here. This is a 50-page report. If you want to order it, just order it, thebiz at brokersalliance.com. And just a heads up, before moving forward with any of the things that Ken and I are talking about on these shows all week, and believe it, if I ever had this caveat, today's the day, always consult your tax advisor and your broker-dealer compliance officer. And remember, it's Breast Cancer Awareness Month. So keep in mind that we're already setting aside substandard cases, such as breast cancer, for the impaired risk season coming up right here, right around Halloween. And we're talking about now about using life insurance in tandem with Social Security. Now, remember, this is the Business Insurance Zone, so I am going to bring it up. But the tactic, if you die, I could have my premium. This is what, I want to make sure I got this right. I could have my spouse elect this, right? She gets a third of my number, my 62 number, or
35% at
right,
age 62,
right,
or 50% at age 66, or full retirement age.
Okay, and that could fund, so if I died before I started taking, I could get my entire coverage paid on, so that I know that my benefits are going to be paid.
Well, let's talk about this. A lot of people are concerned that if they don't elect early, that they defer it to try and get higher benefits, if they were to pass away early, then they never would have collected anything. So let's look at that. Let's say if somebody started at early retirement at 62 and went to age 70, that's 8 years. And let's say that they're pretty substantial. A lot of people are much lower than this, but let's say it's $2,000 a month. That's $24,000 a year times 8, which is what, about $144,000. Right. Well, they could, at the same time they're deferring it, elect the spousal benefit. And let's say the husband is making $2,400 as benefits, and they do this at basically a third, or $800 a month. Well, what's term insurance for $150,000 or $200,000
Nothing.
from 62 to age 70 is nothing, right?
Right, even at the standard tables.
So you could get all this extra money, pay for the insurance, right? And if you were to pass away early, you've got it covered. And so term insurance, that's perfect for term insurance. That's a specific period of time. It's a short period. If they're in reasonably good health, they can get it. If they're not in good health, then we get issues. But this is one stopgap measure to protect that, and then some.
And especially if you're thinking, gee, I do have a few issues, boy, now's the time to start looking at underwriting, just because in the fourth quarter of every year, it gets as benevolent as it's going to get. Term insurance is as cheap as it's going to get. And we use that. I love the way you use that word temporary, because it's really only a time certain event. We only need it for a small period of time. So when I'm looking at 10-year level term, right? Temporary expense reimbursement money, TERM. I just want to mitigate my issues, right? So that I can have a good shot at getting everything I have. And the best part about it is I might be able to get my spousal benefit to pay for this.
Right, exactly.
That blows my mind.
Well, and then let's talk about some people it's important to them to leave a maximum legacy to their children. So instead of the term insurance, if they want a long-term benefit, not just for that short period to cover this, but actually really want to buy some extra insurance, tax-free benefits to the children, they could use all of that money and buy much higher amounts of income. So it really depends upon what the client tells us they want to do. We can do just a temporary cheap stopgap thing, and term insurance is perfect for that. Or they say, no, I want to do it longer. Now, there's a hybrid there, okay? So, okay, I love my kids, but I love myself too, and I want to make sure I'm okay. I hear this all the time for retired people. Well, a cash value policy can be designed to bring the death benefit down and still have a very decent benefit to cover the stopgap and the children, but also build up some tax benefited cash value as a stopgap emergency fund, tax-free access potentially to the cash value. So we can do any or all of those goals, and it really depends upon what the client tells us they want to do. But term insurance, gosh, if you're worried at all, the term insurance is a real quick, easy way to do that if you're in decent health.
Well, I love the, and it's funny because you didn't use this phrase, but in your article, I love you call it a kitty fund. You call it, I like this phrase, it says here, build a cash kitty for emergencies.
Yeah, meow.
The real reason I'm bringing this up for Ken is because yesterday he's talking about deferring. He didn't use the official CPA language of I'm deferring from 62 to 70. He goes, we're going to let it cook. Now we're using cuisine,
Well, I think I've been watching The Big Bang Theory too much, where Sheldon, when he's feeling sick, wants to be sung soft kitty.
Oh my gosh.
So I think it's rubbed off on me.
And Ken, I'll give you real money if you want to sing it right here on the show right now.
How much, dude?
I don't know, but I can tell you right now, if any of our shows ever went viral, that would be it. Okay, well, I just wanted to bring that up. Now, the reason I like all this is because not only the options, and now we're using some of our insurance products, because tomorrow we're going to talk about taxation. And that's going to be a big issue, because I don't care what I get. What do I get to actually spend? That's what I want to know. And a lot of our retirement planning, some of our investments, they all may cause your Social Security to get taxed.
Well, let's tee that up real quick, because one is we're talking about increasing the retirement benefits under Social Security and maximizing it under the law the way it's been designed by Congress, okay? Number two is once you make all that, Congress has a habit of then taking it back away, and that's in the form of the income taxes.
Right.
And Social Security is taxable, and it can be difficult. And we can also look at Medicare premiums, which can be up to $3,000 more a year if you make too much income. We can manage all three of those elements.
They told me they would never tax Social Security back in the day when I was a young whippersnapper, and now part of it could be up to 85%. Unbelievable. Well, remember, you can watch this show and all our shows by clicking the red on-demand video button right on our homepage at brokersalliance.com. Well, that's the Buzz on the Biz for today. You've been in the zone, the business insurance zone.
The Biz is brought to you by Brokers Alliance, a national leader in insurance products, support services, and educational workshops. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.